Greetings, members, one and all of the Salivation Nation. How gold could save silver. Let's explore. The first question you may have is, well, does silver need saving? Well, if you're a hardcore silver stacker, you may be offended by that title, but I have actually chronicled in recent days some of the reasons why silver is separating itself from gold in terms of the ratio. It's climbing because of the lack of demand on the industrial side. In other words, silver is trading more like a commodity with low demand these days. And it is still a little perplexing as other commodities haven't taken quite the hit that silver has. But regardless, it is something that is a reality these days, and probably more than likely, that is why we have seen the ratio widen over the course of the last several years, is because of silver trading more as a commodity than as a monetary metal and as a hedge against economic instability. I'm going to be referencing an article here from mining.com that talks about this, as shared with me by a member of the community. And really, it should give us some hope, not only for silver stackers, but also for gold enthusiasts as well. Gold has a traditional role, as we know, as a hedge against inflation. And I would also add to that, against deflation and other types of inflation as well, such as stagflation. But as a hedge against inflation, it has faltered all year. But growing risks that the global recovery could stall as price pressures rise may signal a turnaround for the precious metal. Inflation had already been increasing on the back of unprecedented pandemic-era stimulus, and as a rollout of vaccines spurred the gradual reopening of some countries, the surge in energy prices that's accelerated over the past month on fears of shortages, on top of a broader rally in commodities, is now stoking concerns about sustained cost pressures. We should also note that part of the adding to the rising fuel costs on top of all that is the fact that we have closed down some domestic production areas such as the Keystone XL pipeline and a reliance on OPEC, which we had not been until this year. Bullion is heading for the biggest annual decline really since 2015. And we are starting to see this. Historically, gold has been viewed as an attractive investment when inflation climbs, with the metal tripling through the late 70s as U.S. consumer price gains headed towards a peak of almost 15%. But I would caution against using that term investment, although on the paper side, ETFs certainly one can play in that area because you have more headroom considering you're not worried about premiums, and liquidity is much easier in that regard. In fact, there's a book by Carl Ushanka called Trading the Ratio, where you can actually invest in that way with pure ETFs. But that's sort of a side story here. Bullion is also sensitive to interest rates, as investors are betting that central banks will soon start reining in stimulus and boost borrowing cost. That's weakened the case for holding the precious metal. But just the mere talk of it is what's happening. These prices are being baked in on the hope that that's going to occur, although many of us don't think that's going to happen anytime soon. Gold short-term is not a good hedge against inflation, but we know that we have seen that in other times where inflation has climbed up as well. Gold doesn't automatically react in lockstep with inflation numbers. Against popular belief, the longer term it does better, said Wayne Gordon, Executive Director of Commodities and Foreign Exchange at UBS Global Wealth Management. Hence, we don't see it outperforming unless growth disappoints and there is a broader risk-off, which leads to a reversal of monetary policy trends. This time, though, investors are grappling with the possibility of stagflation, the combination of slowing growth and rising prices that hit major Western economies in the 1970s, creeping back into markets with the recent surge in energy cost. Supply chain turmoil has also boosted the price of many goods for consumers. And we didn't see the prices rise until 1980, and that was based off of the cornering of the market of silver by the Hunt brothers. And really, in a sense, in that case, gold benefited there, because gold went up at that time too. There's certainly some decent gold upside if the narrative changes to one of the persistent inflation and slower growth, said Nikki Shields, a group head of metals energy at MKS. Stagflation would force a macro rotation out of typical reflation reflation assets or commodities like oil and copper and into the precious sector. And you would see silver benefit from gold's rise. In other words, silver would kind of reinsert itself as a monetary asset or a hedge against inflation, and that would certainly be good. And we do see that. In fact, even today, prices are up just slightly, and silver is rising as well. If it was all industrial demand, or the lack thereof, silver would continue to fall, and gold may continue to rise or stay where it is. In other words, the ratio between gold and silver would widen. And we're not seeing that, at least as of the recording of this video right now. European Central Bank Governing Council member Yanis Stanaris on Thursday pushed back on the idea of stagflation. Earlier in the week, President Christine Lagarde said that the bank will ensure that inflation expectations are anchored at 2% and warned we should not overreact to supply shortages or rising energy prices, as our monetary policy cannot directly affect those phenomena. In other words, monetary policy, is pretty much inept, it seems like, and those are huge things, and she just admitted that it cannot directly affect those phenomena. Federal Reserve Chair Jerome Powell and counterparts at the European Central Bank, Bank of Japan, and Bank of England have voiced cautious optimism that the supply chain disruptions will be transitory. There's a theme there for you. So not only is inflation transitory, according to Jerome Powell, but supply chain problems are now transitory. That's interesting. The U.S. Central Bank could start scaling back asset purchases in November, and officials have signaled a growing inclination to raise interest rates next year, which will curb the appeal of gold. And, by the way, as a hedge against economic instability, and that's mostly in the paper markets. We know the physical markets, this metal is something that people are not slowing down on buying, and same thing with this metal, silver. People are buying it, and I think they understand that something's going to give here, and they're not swayed by the day-to-day actions of the market or even what the Fed does or says. In other words, people are keeping on stacking. And I think that's encouraging. I think that's a good thing for sure. Investors will be closely watching the U.S. jobs data for September. Prolonged high unemployment is another signifier of stagflation and has the potential to delay rate hikes, given that the Fed has stipulated maximum employment as one of the criteria for liftoff. And of course, we know people aren't going back to work because, the stymies keep coming. If not from the feds, from some of these larger blue states. It's not a question of whether inflation will have a severe impact, but a question of when, said Gnanaskar Tiagarajan, director of Comtrend's Risk Management Services. So investment in gold and silver is the most ideal because gold is an inflationary hedge, and silver tends to appreciate much more when gold starts rallying. And that means that we are going to start to see silver react as a hedge instead of as a commodity if gold starts to rise and there is a real threat of stagflation. So that is how gold could save silver in terms of the price. But in reality, we understand that aside from the price movement, we know that is ultimate hedge against economic instability gold and silver are money. And that means, obviously, that they recognize that for thousands of years, but they're not traded as currency, so therefore they are hibernating money, what I refer to as hibernating money, especially silver, although you can make the argument that gold is active money because, well, it's traded between central banks, and central banks hold it and store it as that, not only as a store of value, but as a monetary asset because of the Bank of International Settlements recognizing it as such back in April of 2019 as a Tier 1 asset. And so therefore, when we start to see silver on piggybacking on gold in terms of the price movement, people do see that. That is a direct sign that people will see silver as the counter asset. It is the Robin to the Batman, to gold's Batman. Both crime-fighting superheroes, and even though the Batman reference, or the Robin reference here, is larger in diameter, they are both equal in weight in fighting crime, and gold tends to lead the pack because it is treasured and is seen more as that financial asset. But you know what? Robin's pretty versatile, I would dare say. Yes, indeed, and silver. That was kind of a corny reference to Robin and Batman, but nonetheless, flying off the seat of my pants on this video. But nonetheless, there you have it. I think that is a pretty good argument, though, of how gold could save silver as we are starting to see these metals kind of take a hit. But keep in mind, gold, being that ultimate safe haven asset, is not affected as much as silver is, because there is that push and pull. The duality of the metal continues to shine on, but we may be at the precipice of seeing a turnaround in gold prices, and therefore silver will benefit from that. Let me know what your thoughts are in the comment section below. We'd like to extend a multitude of gratitude to you all for taking the time to watch this video, and to encourage you to please rate, share, comment, and subscribe.